You're listening to the Business Wealth Impact Podcast, your source for empowering information and cutting-edge ideas from the world's top minds. I'm your host, Jeanne Amlour, founder of seven-figure coaching company, Jeanne Amlour International. Join me on a journey to unleash your potential and create your highest success. Welcome to Business Wealth Impact. Hello, and welcome to another really interesting episode. We have a fascinating guest today, Amy Yin, who is a venture partner at DeFi VC, previously founded OfficeTogether, acquired by Envoy in 2022. Her decade-long technical career includes roles at Facebook's Internet.org and Coinbase. A Harvard computer science graduate, she supports female tech entrepreneurs and others to start and grow big businesses. Welcome, Amy.
Thank you so much for having me on the podcast. I love talking about startups and tech. I've been in Silicon Valley for over a decade, and this is really home for me. When a lot of folks were leaving during the pandemic, I really wanted to double down and make sure that this was my long-term home. It's been nice seeing so many people come back lately.
Oh, that's awesome. Okay, you're a stalwart. You were loyal. Now, I have a question. Are you from the Bay Area originally?
I actually grew up in a really small town in Wisconsin. It was about 15,000 people. My parents are Chinese immigrants, and I had never met a computer scientist before, let alone a female computer scientist. And then when I went to Harvard for college, I ended up taking my first computer science class as a sophomore. I was 18 years old, and I thought I was already behind because all my classmates had taken AP computer science. And I was like, oh my gosh, I'm never going to catch up. I'm not going to succeed. But I really fell in love with it. I felt that writing code really matched my very analytical mind, and it just was a good fit for me. And then I also decided I switched my major actually to computer science after that one class because I realized that it would really allow me to have a lot of differentiation in the world. I was originally going to become a banker. I wanted to become an investment banker. I had no idea what a computer scientist was or investment banker when I was 18. But I knew that these were stable jobs. And that was really important for my family growing up as an immigrant. Like, we grew up like very comfortable, like middle class, but I knew that it was really important for me to make money out of college. And I thought finance would be the way to do it. And then I realized that the folks around me that were doing finance, it wasn't that differentiated of a skill set. It was a lot of like athletes, like folks taking social studies. Like, there was no specific major you had to do banking. And when I was 18, I realized, okay, I want a job that no one else can have, or at least not that many people can have. And I realized that getting into tech and to computer science would really give me an edge and differentiation from early on in my career. And it really did. I honestly I feel like it was lucky, but I also feel like I was being quite strategic at that young age. And so then I ended up doing my first internship out in Seattle at Microsoft, and things just kind of took off. I just realized that this was a really wonderful industry, moving quickly. Back then, I remember I got a little brainwashed from Microsoft and I bought a Windows phone. 2 years on Windows Phone was really rough. I miss and then I'm back on iOS and Apple. But I learned so much from being there. And I got to be at Microsoft when I was the phase of reinventing itself. Microsoft in 2010, 2011 was not cool. Microsoft has done such a good job in the last decade, becoming so relevant with Azure and the Office 365 suite, Microsoft Teams, just building an ecosystem where people really love it. Whereas, a lot of startups, we work on G Suite, you have to piece together things, right? I have to have Slack for my messaging. I have to do Zoom for video calls and Gcal and Gmail, but Office 365 offers it all. So I think Microsoft's done a really, really good job staying relevant for the modern tech world.
Awesome. Okay. So that's so interesting to hear about what you thought about in college, because I have a kid that's going to be in college soon. And I love hearing this reasoning. And I really agree with you. You really did work that out well. That was logical. And the rest is history. So then you got these great jobs. You worked for Facebook. You worked for Coinbase. Now, what happened? How did you get into the venture capital world and the angel investing?
Let's see. So I worked at Facebook when it was about 5,000 people, and it had just IPO'd when I went there. It was my first job out of college, and I had a really awesome experience. I really learned what the best looks like, and it really set a high bar. I think for myself, I still had a little bit of that imposter syndrome. It definitely affects women more than men, but honestly, I think anyone can feel imposter syndrome. But being the other, being a minority in a room, the way I've always felt as being a woman in tech, I definitely felt that my imposter syndrome would be a little bit stronger. Like I would look for the ways in which me being a woman would make me an outsider, even if it might just be like, whatever, I have fewer years experience or I just don't know this specific thing. And so coming out of college, I really felt that I needed a brand name on my resume. In my head, I was like, I've only been coding for a few years. Like I need to have a brand name to prove to everyone that I'm really technical. And that's not the case for everyone. I had a lot of friends who had been coding for so long, superstars at Harvard, and then they went to small startups because they didn't feel that they needed that brand or stamp of recognition. And so, depending on where folks are in their careers, I do think having that big brand name, like that seal of approval, can really create momentum throughout the rest of the career. And so after I worked at Facebook, it just really opened up doors for me where every startup wanted me, even though it was still relatively early career. A lot of startups, especially now, they're being a lot more picky. It's actually really sad. I think that there's been a big dearth of entry-level jobs. Right now, the hiring market's not as hot as it was the last decade. And so companies are feeling more choosy and they're like, well, why would we, pay 30% less to have a junior person we have to train when we could have like a senior person with less experience, they're going to hit the ground. But it's actually not good for the industry as a whole because then we don't have this class of really ambitious young people rising up the ranks. But anyway, so at the time I was able to work at a startup, even though it was still relatively early career. My first startup I worked at was hired. It was about 100 people. And then I really just got the bug for it. I realized that even though Facebook was so awesome and it was nice having the benefits and the perks and the scale, as a 22-year-old, I was deploying to millions and millions of people every single day. You don't get that kind of scale at a startup, but what you do get is autonomy, power, influence, the ability to really move up quickly. And so when I was leaving Hired, I got really into crypto. My roommate was like, you have to read this white paper. I read the Bitcoin white paper and I was hooked. We were on Coinbase every day. We were talking about cryptos. We started hosting our own meetups. Back then, when this was still very underground, it wasn't that mainstream yet. And I realized that this was going to be the next big thing. And I was really, really passionate about the future of finance, the idea that with cryptocurrency, I could be my own bank, right? You know what they say, like, not your keys, not your wallet. It was so powerful that a bank could not shut down my ownership of my cryptocurrency. And I thought that was something that would really matter because especially, I think I go back to feeling sometimes of being an other, being in tech. My computer science class was maybe 20% women. And then my Facebook intern class, there was maybe 5 female engineering interns out of 700. It was really, really bleak. And then when I went to work at Facebook full time, it was maybe 10 to 15% female engineers. So definitely that feeling of other has always been super strong. And so tying that back to Coinbase, the reason that I got really excited about working at crypto is because even if you're an other, if you're being left behind by these mainstream institutions, banks are less likely to give minorities loans. Crypto couldn't leave you behind because they don't care what your skin color is, even what country you live in. There was just so much democracy to it. There's still definitely issues, right? Crypto is still majority white men, but that was actually a thing I really entered the industry to change. I wanted to be part of the face of crypto and be hey, women, people who more minorities, people that look like me can also benefit from the access and the wealth that's generated by this alternative way of finance.
So I love that your mission was in there as well, that you want to democratize currency and banking. So it wasn't just you just loved it. It was also the implications of, wow, it doesn't matter where you are in the world, what color your skin is, what gender, crypto is more democratic. So that's great. Even though it was all mostly white men, I agree with you. Okay, so that was Coinbase. And from Coinbase, what did you do?
So I joined Coinbase really early on. It was about 100 people, and I got to see it to go to thousands of people. And then I left Coinbase to start my own company. And it just goes back to having the itch. I after it went from 100 people to thousands of people, it just wasn't quite what I wanted to be at. I love that 0 to 1, super early stage. And even though I really, really love Coinbase and I'm so grateful for that time, I just felt that it was time to be my own boss and to go on my own. And so I spent about 9 months looking for ideas. I think that there's a big fallacy that you have to have an idea to start a company, but I also think that you could just have the will to make something happen of your own accord, and you'll look for an
Mm-hmm.
idea, find a problem to solve, and build a business around
Mm-hmm.
it. And that was definitely my strategy. And so after about 9 months, I realized that there was a big shift in how consumers were thinking and businesses were thinking about the
Mm-hmm.
office. So this was, middle of 2020 during the pandemic. And my big key insight is that people didn't want to use the office in the same way
Mm-hmm.
before. And so the office needed a big facelift, Office 2.0.
Mm-hmm.
And so I started building a software platform for managing the new way that folks want to work, this like hybrid, more dynamic office. So, I was first time founder. I knew nothing about funding, but I was able to pull together just shy of $4 million of funding.
Wait, okay, whoa, wait. That was amazing. You just said I knew nothing about funding, but I managed to pull in 4 million. So how did you do that?
It really helps that I had worked at Coinbase. So Coinbase, actually at the time, Coinbase hadn't even IPO'd. So it was still question mark, especially people who were a lot of crypto naysayers back in the day. Now it's a little bit more mainstream. But I think having Coinbase on my resume helped. And then my Harvard network really came through for me. And I know that's probably not encouraging to a lot of folks who didn't go to an elite college, but surprisingly, Harvard was not very useful to me for like most of my career when I was an engineer. But then it really came through for me when I was raising, because a lot of investors went to Harvard. There's a big Harvard network of capital allocators. And so, my funding round just happened so quickly. It took like 2.5 weeks for
Unbelievable.
me to raise my seed round.
Okay.
It was unbelievable. It's like, that's very rare. I knew I had like a really very, very good outcome.
And we got the
Yes.
answers because of the Harvard connection. Okay.
The Harvard connection, being an engineer, that kind of stuff.
Right. Thank you for being very transparent about that, because often people will say how they're doing something, but they leave out one very key piece of information, like the Harvard network, because then they'd be like, how did she do that? And that's why I asked that. How did you do that? Okay. So that came in handy. So then you started this company, and then what happened?
Started the company. I had already, so I started the company. I sold, I already had 2 contracts before I fundraised. And so I think people always ask, like, how do I go fundraise? And having some traction, having a product, having some customers really helped. So I had all of that before I raised any money. And again, I had the position where I was fortunate enough that I could like bootstrap my business at the very beginning. Not for everyone. I was honestly going to bootstrap for longer, but my Coinbase friends were like, especially my former founder friends were like, hey, Amy, you're already putting in your time. That's your most valuable asset. Spend someone else's money. And so they are the ones who helped convince me that I should fundraise. And then, just started selling. I did a lot of founder-led sales and learned the whole playbook from scratch. I had this like amazing angel investor. They're called 212. They gave me a sales coach that like worked with me on basically like almost a weekly basis to really show me how to, start a call, close, track my pipeline. And I learned all of that from scratch. Being a solo founder could be very, very lonely, but I had such an amazing team around me that I hired someone that I went to school with to kind of be my head of engineering. And he took care of all of the product design stuff so I could really focus on the go-to-market. And, obviously with my background is technical, I'd never done go-to-market. I'd never done sales or marketing. So I had to learn all of that from scratch. But, I felt like I was able to really pick it up pretty quickly. And so we were able to land some really big logos like Brex, Tide, Norton Rose Fulbright, MyFitnessPal, just, like a lot of like household names that you would recognize. And then we were approached multiple times by Envoy actually to sell the company. And I just realized that in 2022 was the right time to sell. So after 2 years, we were able to, I guess I say we, women are more likely to say we, even though it was I. So I try to correct myself and say I, because it was actually just I. Women tend to take less credit.
No, I agree. It was you, all you. So you, and I love that you just said that as well. So you sold, what did you exit? What did you sell for?
So that's a private transaction, but it was we were happy with the acquisition. I was able to bring over the team, most of the team, like the R&D team, the customers, got a lot of logos over, and I was able to join Envoy. I became a director of product there. So this is my first time in a product role. It was very different from being an engineer and engineering manager, but I already had so much familiarity working with the folks that I was working with that we started just by being our own team of 10, maybe 11. I think they gave us like one Envoy folk. And within 6 months, we were shipping so quickly. We already got to market within, I think, 4 or 5 months with our first product that they were like, hey, we want more teams to look like and feel like you. And so within a few months, they actually reorged the company so that I was running 2/3 of all the teams at the company under Eng product and design. And so we basically took what Envoy had and the vision for OfficeTogether around having a all-in-one workplace management suite. And we basically like rebuilt that vision and relaunched it into something called Envoy Workplace, which has been super, super successful, where I think that it hit 10 million in revenue within 1 year, which is really awesome.
Wow. And so you're selling the software?
Selling a software platform. That's right.
Okay.
And so my role in it was product. So I was kind of like the vision as well as kind of the execution and organization of rallying the troops. And my head of engineering, Willie from OfficeTogether, was really like my right-hand man. And we had so many years of really successfully working together as a startup that getting to work at a bigger organization was actually surprisingly not that big of a transition. Like Envoy's only like 300, 350 people. So not like massive, but still much bigger than, 17 people was the max size that OfficeTogether was. And then I actually got was planning to leave. So technically, usually after founders get acquired, they stay like 1 to 2 years. It's pretty rare to stay longer than that. And so I had been pretty upfront with Envoy that, hey, I'm like down to like do work for like 1 to 2 years. So that's exactly how long I stayed. And then I left in February. And in the meantime, the lead investor from OfficeTogether, Defy, had heard that I was leaving because we kept in touch. They were really, really useful for me as a founder, talking to me all the time, made a lot of great introductions, just really had my back the whole time. And they reached out and they're like, hey, we heard that you're probably going to leave. Like, if you're not going to work, why not come work with us? We'd love to have your expertise and your technical know-how on the team. Would really add a lot. And I was like, I'm not really looking for a job right now, but why not? And I think that that's a big thing with venture is that there's usually not a job you can apply to become a venture capitalist. It's usually like an invitation only type thing. That's not true for some entry level jobs, but it's very, very hard to become an entry level. Like if you go from being a new grad to like being a VC analyst or an associate, it's very hard to climb from that to becoming a general partner. Usually you have to like go to business school, start a company, become an operator, get some sort of experience so that you can be really helpful to the founders. Whereas if you've only worked at a VC fund, then you don't have as much to offer to the founders in terms of really helping them scale their business.
Right.
So I became a venture partner with them at the end of last year. And it's been a really amazing journey. I've done 2 investments, which is actually pretty solid, both in dev tools, which is something that the fund didn't previously focus on, but because that's like really my background is tools for engineers by engineers to make engineers go faster. That's what I've been really focused on because I can do the due diligence. I have the network for it. And that's where I really see a lot of power law returns happening because when you can make engineers build things more quickly, you can like get things to market faster. And so, if you look at the AI trend right now, there's a lot of headlines and news like, is this a bubble? Is this a lot of hype? I read some stat from Sequoia that $50 billion was spent on NVIDIA chips, and that only resulted in $3 billion of revenue for those customers. And so, most companies, that's like a pretty high in R&D investment for little revenue return. But where we are seeing the returns going in AI is actually to developers, right? So Microsoft, GitHub Copilot helps like engineers like code a lot faster. It's like pretty amazing. They have like 1.3 million subscribers. And so that's like the type of thing where I'm actually seeing AI being useful immediately at the application layer. And I'm like really excited to see what else is happening. There are some companies that are doing some really good things at the AI application layer, but I think we're still at the very beginning of it. So now a ton of capital has gone in, a ton of investment, a lot of founders are flocking to the space, and I think it's still going to take many years for us to see the AI really well incorporated so that we're seeing that revenue and that productivity gain. But I'm still super, super bullish.
Yeah, I mean, it's obviously going to be just exponential growth with the AI. It is already. There are some really good tools. I mean, Chat GPT 4 is pretty darn good. Copilot's pretty good. Claude. These are things that people are using. So what you're looking for is development tools for engineers. So that's not for the end user, right?
That's correct.
Hmm.
So like one of the companies I invested in is like a former Coinbase coworker. It's building like a new programming language, and so like
Mm,
what are like all-in-one tech stack that has like your database, your debugging tools, your actual servers, like a
mm,
website launcher, all in one. Which doesn't exist right now. So it's a really big bet. It's definitely like a moonshot, but my
mm,
coworkers are definitely the people to build it. And then another one I recently invested in is basically like a way of doing queries that like previously you couldn't do before. So that we haven't announced this investment yet, so I don't want to like go too much
yeah.
into it.
Okay,
But
too quick.
they're definitely more on like the technical
Hmm.
side. So if you're not an engineer, you probably wouldn't appreciate it as much. But I do think that there are a lot of really interesting things happening. So, like the fund I work at, Defy, it's about a $700 million fund. So we do kind of like early stage, like seed to Series A. Like we love to be the first check in, but we also like are happy to come in after you've raised a seed or had a little traction and
Mm,
whatnot. We're less likely to invest into like some of the things that you invested, like ChatGPT or Claude. These are big foundational models that are super, super capital intensive, need a lot
mm,
of money. So, there's Perplexity. It's kind of a search engine that's trying to overtake Google. They've already been valued at $1 billion. I think they're only 2 years old.
mm,
Cohesity is another one. I think that just got achieved like a $2 billion valuation, even though 6 weeks ago they were 6x less that. And so
mm.
these are businesses when you're building at this like foundation layer for AI.
So, what are some of the companies that you're investing in as far as like AI and development tools? It's not like the Chat GPTs of the world, right?
Yes, I have done some dev tools companies, and I invested in a data company. And what's really interesting is that companies that want to be great at AI have to really be strong with data, right? If you want to process all the data, you have to have great data management, great data replication, a great data team. And so I think data tools are actually a really important precursor to AI. And I don't think if we didn't have all the great tools like Databricks, Snowflake, et cetera, we wouldn't have been able to get to this AI revolution that we're in. However, my company,
Mm,
so I work at a fund called Defy, and we're about 700 million of assets under management. So we do like more early stage, like the
hmm.
seed, sometimes up to Series A. While we do invest in AI, it's much more difficult for us to invest in a big foundational model play because these are very, very capital intensive businesses. And so if you think of something like OpenAI or Elon's new company XAI, I think they just raised $6 billion.
Mm,
These are very capital intensive businesses, and from the get-go you already have to treat them like growth stage investments because we can't be giving them a typical deal of giving them like a few $1 million for 20% because they're just not going to
mm,
have the capital they need to even get to an
mm,
MVP. In that way, they're actually really similar to these different cloud offerings. So if you think of like Google Cloud Platform, Azure, AWS, they are very capital intensive. They tend to be dominated by bigger companies.
mm,
And security is super important. And a lot of people think that they're going to be commoditized, right? They're like these consumption based. If you talk to engineers, they'll very interchangeably be like, okay, I'm going to like run today on Azure, tomorrow on GCP. And then, oh, if GCP ever goes down, like the backup will be AWS.
hmm.
They're very interchangeable. The same way with the models, right? I have like my founder friends, they will integrate Claude and
Hmm.
ChatGPT and OpenAI and like a Llama, and like they'll just switch between the different models
Hmm.
and train different ones. There is some differentiation, like Llama is like a small parameter model, so it's a lot cheaper to fine tune,
Hmm.
as an example. So there's a little bit more differentiation, whereas like a cloud offer service is a cloud
Mm,
service is a cloud service. But so yeah, they have a lot of things that make them a little bit
hmm.
pretty similar. They also just provide infrastructure to startups so that they can focus on application logic. And so if you think of if you're SaaS, like right,
Hmm.
a software as a service, a lot of that boom in the last decade was enabled by platforms like Azure and AWS and GCP, because these startups could really focus on application logic instead of like literally standing up a data center and having to like keep their databases online. These are very hard
Mm-hmm.
things to do, especially with the uptime you want to do. And I think it's really
Mm-hmm.
similar with AI. I was really amazed because recently I was talking to one of my friends who is the head of AI for a very hot AI company. And he was telling me that they have a very minimal infrastructure team, which was really shocking to me, even though they're so deep in AI, because they're just sending the weights and the parameters to OpenAI, and then
Mm-hmm.
OpenAI trains and runs the platform, gets the compute resources, everything. And then whenever the end user needs to make a call that involves AI, they'll like go to the startup, and then the startup will make a call to OpenAI and pass that through. And so they actually have like very minimal infrastructure
Mm.
costs, which is pretty awesome, pretty revolutionary, because there's so much.
But isn't that the whole point of AI, that moving forward we don't need as many people? So that sounds like they're actually employing it well and proving to us that this stuff works because
Yeah.
they're using the AI. And that whole thing about in the future you're going to have like one person using AI making billions of dollars because they're using AI. So that's actually so interesting and a testimony to the fact that this works.
Oh, absolutely.
Yeah, and then we were chatting earlier and you said, okay, I said, what can you tell people? And you said, how about how to get into angel investing? So let's hear about, how to get into angel investing. What's the how to that's simple?
Yeah. So the first thing to do is to make friends with founders. I think that being a builder yourself is really helpful. So I was a builder. People want to talk to me about building stuff, and then I end up making friends with builders because I want to talk to other people about how to build
Hmm.
my own thing. And so, being in the Bay Area really helps for that. But I've always like had a really deep network of founders, engineers, and like friends who are just in startups or bigger companies, because they just love to put something
Mm.
out in the world. And so I think that making sure you have exposure to folks who are trying to push the frontier of what's possible is like step number one. And step number two is to be really helpful to your friends. And so I'm all about karma, and I have always gone out of my way to be super useful to my friends, and go out of my way to like make introductions. Whenever I can make connections across folks, I do that. So actually, I think 3 of the startups I invested in, I introduced the co-founders to each other. And so my very first angel investment was actually, I think it was my first one. One of my first ones was with a company called Dover. I introduced them to 3 of their first customers, like the 3 of their first like 5 or 10 customers. And they're like a really awesome all-in-one recruiting platform. And so I was actually a significant chunk of the revenue. And then I asked them like, hey, like your business seems really interesting. Can I invest? And they had I think they had like single digits number
Mm.
of angel investors, like very, very choosy. But my friend was like, honestly, Amy, you have been our most useful angel investor, and you're not
Hmm.
even on our cap table. Like, let's get you on the cap table. And so, similar to being a venture partner or working in VC, it is like an invite based thing for a lot of the best deals, where you have a connection with the founder, you spent time being useful, they want to have you in. That's like the strategy for smaller checks, because
Right.
I
Small
was just
checks.
getting
Yeah.
started. I'm like writing like 5, 10K checks. Like these are not meaningful amounts of money to the founder. Like it's probably like more work for them to accept their money and put another person on the cap table. But the value I'm bringing is like the connections, the recruiting, the know-how, the expertise, all that type of stuff. When
You're talking about how getting to know people and becoming friends and about Dover. Okay.
So basically, when you're angel investing, when you're just getting started, if you want to write these like smaller 5, 10K checks, which is definitely where you should start and where I started. And I always tell people, if you're angel investing, don't give any money that you're not willing to light on fire, because that's absolutely what you're doing. Most of your investments will not return. And that's like the power law that you're going for. If you write 10 checks, if even one of them returns anything, like that's already probably better outcome than you could expect. So if you're writing these smaller checks, it's a lot of it about like being useful, because the capital, like that's 5, 10K check is not that useful to the founder. They're really trying to get you there for the advice. Maybe you have a brand name, or you have a great network. if you're able to write these like bigger checks, these like 25, 100K, right? Like if you look at celebrities, like, like Beyonce and Jay-Z invested in Uber, that's like a totally different game. Like another company that I invested in, they were doing their like Series B or C, and they got to choose like, oh, do you want like Trevor Noah, or do you want like this celebrity or whatever? These people are writing like very large checks because they want the return and they have like the brand name. That's like a different game than probably most of the people listening to this podcast are playing. But if you can write these like kind of like 25K to 100K checks, people are more likely to go seek you out because like they're trying to fill out a round. But at these like smaller 5-10K checks, you really just got to pull your weight and hustle.
Okay. That is really good advice. Basically, just get to know people, be helpful, and at some point they'll take your 5, or I think the 5 and 10 is a good strategy. And if one of them turns out well, you're winning. Well, great. That is fantastic advice. And it's usually about the relationship building, usually. Okay. So this has been super interesting. What's one thing you want to leave with people before we finish up here? One mindset about business and life.
Yeah, I would say that just get started. I'm very much the kind of person who will jump without checking if you have a parachute. I have a parachute and just figure it out on the way down. And I think that so much of investing in life is just about like making those like small, just like getting started, getting some momentum. It's like, what is like one thing I could do to make progress today? And I think that like relentless mindset is like a great way to tackle any problem in life.
Oh, I agree with you. I love that. Just jump and the net will appear. Well, this has been fantastic. Amy, thank you for being on the show, first of all. And secondly, how can people find you?
Yes, they can find me amyyin.com, or they can email me, amy@defy.vc. I'm always happy to chat with founders and folks who are thinking about building big things.
Fantastic. Okay. This has been wonderful. Thank you for listening. Please subscribe, share, and turn up for the next wonderful episode. You're listening to the Business Wealth Impact Podcast, your source for empowering information and cutting-edge ideas from the world's top minds. I'm your host, Jeanne Amlour, founder of seven-figure coaching company, Jeanne Amlour International. Join me on a journey to unleash your potential and create your highest success. Welcome to Business Wealth Impact.